Welcome to the Power of Credit, and thank you for taking time out of your evening to come on in. We are going to be talking about all things credit this evening, and we're going to start off with a little bit of true or false. You can feel free to type into the chat if you have an answer, or you can feel free to give me a thumbs up or a thumbs down from the annotations, or you can say yes or no under the participants tab. So true or false? Having access to credit is a consumer right. So having access to credit as a consumer right is false. You have to earn credit to be able to have it. And it's also a responsibility. So what is credit? So credit is any borrowing that you're going to do, credit cards, auto loans, home loans, and your credit is your reputation as a borrower. So the credit cycle, and we're just breezing through some things here, but if you have any questions, please don't hesitate to stop me and ask. The credit cycle is this, right? You get some kind of line of credit, whether it be a credit card or a loan, and you pay the lender. The lender then updates their records. Then the lender shares with credit reporting companies, and the credit reporting companies share with new lenders. So this cycle goes on every month, and it can be pretty. You don't really know about it unless it becomes problematic because there's a break in the cycle, such as you stop paying the lender, which is typically the one where the credit reporting process breaks down. So another true or false. Credit reporting companies like Experian, TransUnion, and Equifax decide whether a credit application is approved or declined. So if you have an answer in your mind, the answer is false. Oops, I am backing up instead of going forward. Credit reporting agencies are basically like libraries. It's where companies check out credit histories if they have a permissible purpose. So the person that is doing the lending actually makes the decision. So if you were to come to the bank, for example, for a home loan, we're going to run your credit. We're going to pull your credit reports, and then we get to decide whether or not we're going to extend you credit. And we have our own rules at the bank, and every organization has their own rules about levels of creditworthiness. So what is a permissible purpose? What would allow somebody to pull your credit? So it's to open or manage credit accounts. So if you are going to get a new credit card, to get a new loan, that is permissible. Or if you have an account with somebody, for example, your Visa card, and you would like them to raise your credit limit, they will probably pull your credit report again at that time to make sure that your credit is still good, or maybe that it's gotten better since the last time they checked. And so they could pull it for that purpose. They do a light pull for offers of credit. So those mailings that you get in the mail that said it's pre-approved. So the light checks don't actually affect your credit at all, but they do have permission to pull your credit, to offer you credit. For employment purposes, so for example, if you were going to apply for a job somewhere, an employer has permission to pull your credit. To underwrite insurance, so this has come on board in the last several years. Most all insurance companies are checking a person's credit, and that is helping them determine what your rates are going to be for insurance. So For example, if you have poor credit, your insurance rates might actually be higher than those people that have good credit. A business transaction, risk valuation by an investor, and disclosure to a consumer, those are all for business purposes. So if you owned a small business, if you have a small business, or if you're getting into business with somebody, those would apply to you, but they don't apply to the average person. And the other one that is important, especially around here, is eligibility for government license. So if you're in the military and you need to have a security clearance, if you're working at EB, for example, and you need a government license to be able to do some of the work there, that it's important to have good credit. So what is a credit report? So a credit report is a detailed report of an individual's credit history. Credit bureaus collect the information and create a credit report based on that information, and lenders use the reports along with other details to determine a loan applicant's creditworthiness. So for example, if you're going to go for a home loan, you're going to be sitting down with that lender and having a conversation about the items that might be on the credit report. So in that instance, your credit score might not be the end-all be-all of your application process. For a credit card, the only thing they're going to look at is your credit score and your credit report. They're not going to bother having a conversation with you about how you might have gotten there. It's different depending upon the type of credit that you're applying for, but some lenders do have that conversation with you. So here's a sample credit report, and they all look a little bit different. There are 3: Experian, TransUnion, and Equifax. And they all look a little bit different, but they all contain the same types of information. So section A over here shows information about your name, your current previous addresses, your social security number, your date of birth, and other information to identify you. So it could be, if you're married, a spouse's name. It could be any other previous names that you might have had. That might all be there. Section B is public record information. So this area is located, and it has records from your local, state, and federal courts. Things like bankruptcy and child support would appear there. Section C shows collection agency account information. So if you were to fail to pay back one of your creditors, they might hire a collection agency to contact you, and that will show in that C section right there. Section D shows exactly what you would expect to find in your credit report, which is your credit history. It's a list of all the places that you have credit or you have used credit. It has how much credit has been extended to you and how much you're currently using, and if you are on time with your payments. And section E is that last section down here, and it's inquiries. So every time somebody pulls your credit report, they get a little list down here in inquiries. So as you can see down here, it has a date, and then, a credit card company, a department store. So those only stay on your credit history for 2 years. So how do you check your credit report? So you can go to annualcreditreport.com, or for those people that are not comfortable with online, they can call 1-877-322-8228. The one thing I will say about both is that you are going to have to answer a lot of very personal questions about yourself. They're going to be checking your identifying information with that information that is found on your credit report. So they may ask things like, which one of these addresses matches a place that you have lived. Which one of these telephone numbers is a previous telephone number of yours? Which one of these people have you been affiliated with? And they will probably ask you your social security number, your email address, your current mailing address, things like that. They have all this information, as long as when you're reaching out to a company, you know exactly where you're reaching out to. It's okay to give that kind of information. It's when somebody is calling you and asking for that information that it is problematic. But if you're reaching out to somebody, they need that information to make sure to be able to identify you, and make sure that it's not some scammer calling to get your credit report, which has all of your identifying information on it. So when you get your credit report, you can get all three. So you get this once free every year from Experian, TransUnion, and Equifax. It's interesting because you can get them all free all at once. So if I were to call tomorrow, I could get a copy of my Experian, TransUnion, and Equifax credit reports. It is important to look at all of them because different creditors report to different credit reporting agencies. So there is likely to be different information on all three credit reports. And you can get them all at once, or if you're worried, maybe that somebody has gotten your information and you're trying to make sure that nobody's stealing your identity, you could get one a quarter. So I could get one in January, one in March, and maybe one in August, and then start again in the following year. So while you could get all three of them at the same time, you don't have to do that. You can get one at a time. So once you get your credit reports, it's important to look over them very carefully. If you don't agree with what you see, you can initiate a dispute. So you're going to have to initiate a dispute with each credit reporting agency that you see an error. So if there's an error at Equifax, for example, you're going to have to go to the Equifax website and initiate a dispute there. And you may see that not all of them have the same error. It could be a processing error. It could be a million different things. But you have to allow for 45 days for processing. So they basically reach out to the company and say, look, somebody has said that this information is not correct. And you provide them with whatever materials you have to back up your claim that it is not correct. And they'll do the legwork for you. But it takes about 45 days. So they source, verify, correct, and update. If they come back and they say, I'm very sorry, Visa came back and said you absolutely do owe this money. We looked at it, it appears they're correct. If you still feel that you are correct, you can add a statement of dispute if the issue is not resolved. So you can add that statement of dispute right to your credit report. So for example, when you go and have your credit report pulled, everybody will be able to see that there was an issue with that one thing, because that might be one of those conversations that your banker would want to have with you, right? Like, it looks like you were 90 days late here, and then you can say, well, I wasn't, and here's the proof. They just refused to remove it. So what's not in a credit report? What's not in a credit report is almost just as important as what is there. There's no criminal background. So while there may be court cases like if you file bankruptcy, if you had a traffic ticket, and those types of things don't appear on your credit report. So any actual criminal background won't be there. Any medical information won't be there. So for example, you might have a claim from a hospital saying that you are in arrears on your bill to the hospital, but it's not going to say that it is because you broke your arm. It's just going to say that you owe X amount of dollars, and this is the creditor that is collecting it for them. Buying habits and transaction data are not there. So, you know, if you have your Visa bill, the Visa bill is going to say, you know, this, we have extended this person $3,000 worth of credit. They're using $300. And that's basically all it's going to say. It's not going to say that you spent the $300 on, you know, shoes. Assets and bank account information are not there. So sometimes people get a little bit confused because a Visa debit card has the Visa logo on it. And so they assume that things that they spend, they use their debit card for, might appear on the statement. So if you pay your utilities or whatever it is, that doesn't appear on there. Your assets and your bank account information are completely separate. That being said, there is a new program that allows you to have things like reoccurring bills, like your utilities and your cell phone bill, for example, to help you build credit. The only thing is you have to hook up your credit report to your bank account. I just advise people, if that's something they feel that they need to do to raise their credit, then by all means, then that's what you need to do. But just realize you are giving access to an organization to have access to your bank account information. So just be careful. And the last thing is your credit score. So while you have a credit score, it does not appear on your credit report. So don't be surprised when you pull your credit report that there's no score attached to it. It's really only that library list of things, that laundry list of things that we spoke of earlier, but no credit score. That's a separate piece of information. You must, true or false, you must give permission for your credit report to be accessed. So we kind of gave this answer before, and the answer to that is also false. So you do not have to give permission for your credit report to be accessed. As long as it falls in that list of permissible purposes from previously, they can access it without telling you that that's what they're doing. So just be aware that if you're putting your social security number on something, that somebody's probably pulling a credit report for you. So here's some myths about credit reporting. When it's paid, the bad debt will go away. So the debt itself does go away, right? So once you've paid that debt, it is gone. But it still does stay on your credit report. Items stay on your credit report for 7 to 10 years. So, you know, that's what creditors are looking at. So just because you pay something off doesn't mean that it falls off your credit report. And even if you close out an account, it still stays there for people to look at. It just is closed out. The credit reporting company denied me credit. That is not correct. Your creditor, whoever you had applied for credit for, denied you credit. Sometimes it's easier to say, you know, we ran your credit and they said it wasn't good enough. Well, that's not really the case. It's whoever you're asking for the credit said it's not good enough. I'm not responsible for those charges on our account. So this is really hard. Joint accounts are just that. They are equal. So if you have a joint account with somebody, a spouse, a partner, a roommate, the credit companies don't care who you're getting a credit card with. Could be, you know, your neighbor across the street. They don't care. They're not asking how you know each other. They're only checking both of your credit scores. And so be aware that if the other person spends money, you are still responsible for it. And if that other person is not paying that bill, it is still affecting your credit. So even though, you know, if you have a joint account and somebody goes out and goes on a shopping spree and maxes out the card and then doesn't pay the bill, the other person is still responsible for that debt and it will affect their credit. A divorce decree separates joint accounts. So that's not true. A divorce decree will tell in the court who might have to pay the debt, right? So you've had a joint account, the other person went and maxed it out on a shopping spree, and you come to court and there is this debt. So the court can say it is the other person's responsibility to pay that debt. That's absolutely true. But it doesn't separate that account. You have to call the credit card company and have that card closed or you removed or whatever it is, but you're still responsible for the debt. So even though the court may have assigned the debt to somebody else, the credit reporting agency doesn't care about any of that. It only cares whether that debt is being paid or not. So it's just something to keep in mind. Consumers must give their permission for a report to be issued. Again, just like we said in the last slide, that's not true except in the case of employment. Employers must tell people if they are going to check their credit. And so, you know, when you go for a job interview and you fill out the paperwork, they should be telling you if they're going to run your credit. Requesting your own report and pre-approved offers harms your credit history. That is not true. You can request your own credit as many times as you like. So as we spoke before, you can get one free credit report a year. And everybody should absolutely be taking advantage of that. But you can keep checking your credit as often as you like. So without it harming your credit history. It's only when other people pull your credit that it puts a little note on your credit report. If you pull your credit, it does not. There's only one credit score and it's on every report. There are actually 3 credit scores and they're not on any reports. And there actually may be more credit scores than that. In general, I usually speak about FICO, but there are other credit scoring agencies like Vantage Score, which some credit cards use Vantage versus FICO. And so there could be 6, 8, or 10 credit scores out there, depending upon who's looking at what credit score. So it's really important. Most banks and many car dealerships use FICO. So taking care of your credit is really important. It's like owning a car. So if you ignore it until it's broken, it will take a long time to fix it. So if you do regular maintenance, it will be ready when you need it. So the point of this is that you don't want to wait until you're ready to buy a house or buy a car to find out what your credit looks like. You want to be maintaining your credit and keeping it up so that you know exactly where you stand and what people are going to find when they pull your credit report. True or false? The optimum number of credit cards for a strong credit history is 6. So the answer to that is false. It really doesn't have anything to do with the number of credit cards that you have. It's the balance that you have on the cards in comparison to the limit that affects your score. So it's called your credit to debt ratio. So for example, if you had a $1,000 credit card extended to you and you were using $300 of the $1,000, that's your credit to debt ratio. And as long as you're below 30%, that's a pretty good ratio. So again, $300 on the $1,000, you'd be right at the 30%. So it's important, especially if you're using your credit, to make sure that you have a plan to get it back down again. So the great thing about having credit is that you can use it in case of an emergency. So, you know, if you needed to do emergency repairs on your car, or buy a new refrigerator. You could go ahead and go do that and put it on your credit. But it's important to have a plan to pay it back down again so that you're not sitting out there with a really high credit to debt ratio. People will be able to see that you're paying it down when they pull your credit report. And as long as they can see you're paying it down, that'll be pretty good. No credit. So here's all of our people, our younger people, people in high school, maybe people that just haven't done anything with their credit yet. Having no credit also means that you don't have good credit. So you have not shown a history of being able to manage credit. So here's our top 10 do's of credit. So establish a credit report, which means you've got to start using credit. Always pay as agreed. Get a credit card. So that is the easiest way to, and probably least expensive way to establish your credit report. Going out and buying an expensive car is a rough way to start off, because typically you'd probably end up with really high interest rates if you don't have a good history of credit. So starting out with a credit card and being able to pay off small amounts is a much better way to start using your credit, because you can charge a small amount and pay a small amount rather than having to pay a large bill every month. I'm sorry. Use caution in closing accounts. So one of the mistakes that people make is that they want to repair their credit. So they start paying down credit cards. And then once they get one paid off, they close the account. So that's a little bit problematic, because remember how we were talking about credit to debt ratio? So what happens is that you've eliminated some free credit, right? So you've paid it down, now it's available, it's going against the credit you're using, but you've just eliminated it. So it's important, especially if you're trying to repair credit, to leave those cards open. You should definitely get them paid down, then cut them up and throw them away, but don't close them out. Apply for credit judiciously. So it's really important not to just go out and apply for every credit card, because every time you apply for credit, a little note gets made on the bottom of your credit report saying that you had an inquiry. And after a while, if you have a certain number of inquiries, that does start to affect your credit. Time is key. So it takes time to build your credit, and it takes time to fix it if something's happened along the way. Demonstrate stability. So that means that you're paying on time every month as you're supposed to be doing. And you're not paying this month and skipping next month and then paying the month after and then skipping. Have a plan. So this is what I talked about before. If you go out and buy a refrigerator and it's $1,200, how much are you going to pay every month on that card? Figure out, can I send $200 a month to my credit card and get that paid down in a timely manner, rather than just paying the minimum balance every month and just letting it hang out there forever. And put your credit to work for you. So if you have pretty good credit, you should be looking for cards that are going to work for you, right? Are you getting airline miles? Are you getting cashback rewards? What's that card doing for you? If you've got good credit and you're using your credit cards wisely, they should be giving you benefits for that. And then share your knowledge, because not everybody has the benefit and everybody always has questions. Credit is probably one of the topics that I get questions on the most. And it's probably one of the things that people understand the least. So if you can walk away with a couple of good points and, just share them if people, ask you a question. True or false? 0 is a perfect credit score. That is false. Your credit score is a 3-digit number that's generated by an algorithm designed to predict the likelihood that you'll become seriously delinquent on your credit obligations. A perfect credit score is 850. That being said, FICO has a different auto scoring system. And so if you were going for a car loan, it can go up to 900. So, you know, if you walk into a car dealership and they say your credit score is 875, I don't want you to be like, well, that lady told me it only goes up to 850. FICO auto scores do go up to 900. All right. What is your FICO score? FICO is the Fair Isaac Corporation, and it's the largest and best known of several companies for calculating your credit score. So the other popular one right now is just Vantage. But as I said before, some credit card companies use it, but most banks use FICO. So here's how it is calculated. So for new credit users, the whole right side of the circle is going to be lost. So once you start your credit, it's important to be really on top of it because you're only going to be able to get about 65% if it's perfect. So 30% is the amount that you owe. So what does that credit to debt ratio look like? How much credit is being extended to you versus how much are you using? Do you have large balances on everything? 35% is your payment history. Are you paying on time every month as you have said? Or are you delinquent on some things? Have you missed some payments? So the right side of the circle over here are things that take some time to grow. 10% is new credit. So what are you doing? Did you get a credit card when you're 18 and now you're 50 and you've done nothing else and that's the only thing? Have you gotten new cards over time, got rid of some cards, got a student loan, got a home loan, an auto loan? They just want to see that you have some movement going on in there. 15% is the length of your credit history. So new credit users lose 15% right off the top because they have no length to their credit history. So after about 5 years, you'll really start to see an uptick in your credit score by about 15%, as long as that's good. 10% is credit mix. So different types of credit are looked at differently. So the two basic kinds are like a home mortgage, a personal loan, those types of auto loan, or a credit card. So a credit card is revolving credit, meaning that you use it and you pay it and you get to use it again. While, you know, a mortgage, an auto loan, they're extending you a certain amount of credit, you're paying it back, and then when you're done paying it, in order to get another loan, you'd have to apply again. So if you have a good mix, that gets you that 10%. All right, so what does your credit score mean? So if you're 579 or less, you're a pretty risky borrower and your credit needs some work. This is where a lot of new credit users are going to lie, strictly because they don't have any history of using credit ever before. As soon as they start using credit, they'll see that their credit score begins to rise as soon as they start using it and paying it back. What often happens with younger people is that they get into trouble because maybe they don't have stable jobs or they're in college and their expenses are more than they were thinking that they might be, and they're not really paying on that as they should be, and they get into a little bit of problems. 580 to 669. Some lenders will approve loans at that score, but you have to be a little bit careful. Those are those high interest loans. And the lenders might be predatory lenders, meaning they're going to want to take automatic payments out of your account every month on a certain date that maybe might not be good for you. And they're taking out money regardless of whether you have that money to give them. So really be careful about taking loans at that credit score. 670 to 739, most lenders consider this a pretty good score. So if you're in that range, you have a little bit of work that could be done, but you're pretty good. 740 to really 850, that is a pretty good place. 800 plus is amazing. You're an exceptional borrower. But if you're 740 and above, you can pretty much, do whatever it is that you would like credit-wise, as long as you can afford it. All right. Before we went into COVID lockdown, FICO was considering making some changes to their credit reporting. And so they started to roll out a new credit scoring system. And this says this summer, but that didn't happen because people are losing jobs. And this could affect how people's credit scores are looked at. So it hasn't been rolled out yet, but it's going to be the FICO 10 and the FICO 10T. So what is changing about it? It'll take into account not just your current credit card balances, but those over the last 24 months. Oops, sorry. Debt consolidation loans will be looked at disapprovingly, especially if you have added debt since the consolidation. So basically what happens sometimes is that people take a debt consolidation loan, or they get a credit card to consolidate debt, which is fine and it's great because now you're on one payment, maybe a lower interest rate. But if you then charge the cards back up that you just put onto the consolidation loan, it becomes problematic. And now it's not going to be looked at quite the same. People who are accruing more debt will see scores fall, even if it isn't a huge increase. So meaning if you charged that refrigerator on your credit card, for example, and it was $1,500. And so you're paying it down, but you're really only paying like the minimum balance every month. And then you needed something else. So you put something else on the credit card. So really the credit card balance is going up, even though you're paying a little bit every month. It's not really helping to take that balance down. So what does it all mean? If you generally have a low credit to debt ratio, but you used your card for a trip, for example, the new credit score will take that into account. So for example, right now, say you have had a 15-year credit history, and for those 15 years, 12 of the 14 of them, you were great. You didn't do anything. You barely put any debt on your credit. And then you decided you had an opportunity for a trip of a lifetime, which you put on your credit card. The new FICO score will look at that in a more favorable manner, because it's looking at not just what's happening right now with your credit, but what has been happening for the past 2 years. So it will look favorably upon that, as long as you have a plan to get it paid down. But debt reduction for a mortgage will have to take place many months in advance instead of just 2. So right now what happens is, if somebody comes for a mortgage and the credit's looking a little bit iffy, generally you can pay down some of your debt, which will improve your credit score. So in the future, it may not be as easy to be able to do that, because they're looking at a long period of time. So if you've been carrying that debt for a really long time, it's not going to improve your credit score as quickly as it does now. And then nobody really knows how it will affect the scores until it goes into effect. But most experts are saying that it might be a 20% increase in one direction or the other. True or false? Paying a collection account will immediately improve your credit score. That's false. So there's a couple of things that are happening here. You can talk to the creditor about removing it if you pay it. And you should absolutely get that in writing if they agree to that. But that collection account normally will stay on your record, and it can be on there for 7 to 10 years. So If you don't have an agreement with them for it to go away once it's paid, it will be marked as paid, but it will still stay on your credit report. So as people are looking at it, it still shows up as something, a debt that you had owed at one point. So it doesn't take it off your credit, but it will reduce the total amount of debt that you owe. So it's better in a lender's eyes because at least it's paid, but it did happen. All right, and here's our 10 don'ts of credit. Don't feel pressured to get a new card. So literally every time I walk into a retail store, they're asking me if I would like a card for that store. Typically what they'll say is you can get a 20% discount today on your purchase if you get a card with us. Well, what they don't say is that their interest rates are really high, maybe 28%, and a 20% discount isn't even going to cover the interest on the purchase that you're going to make. So while it may seem like a good deal, it might not necessarily be a great deal. Definitely don't pay late. Paying late by 30 days affects your credit score. So if you can pay 25 days late, 28 days late, if you can get that payment in before it's the 30 days late, you might have to pay a late fee to the card. You might have to pay a fee to the company, and it may affect your purchases in some way, interest rates, but it won't ding you for 30 days late. So make sure that if you can pay it before that 30 days, that you do pay it before that 30 days. Don't let YOLO get in the way of your budget. So one of the big things is that people say, you know, you only live once. Well, that is kind of true, but in the end, we really only die once, right? We have to keep living. So if we blow our credit out of the water because we want to go on to this amazing concert, and so we spend all of this money on credit to be able to do whatever it is we have to do, we're going to spend a large chunk of our life paying off that one event, right? So we have to really think through, is that something we really want to do? You do only live once, but you don't want to be spending the rest of the time that you're alive paying off the one thing that you wanted to do. Don't just apply for any credit. Not all credit is equal. You have different interest rates, different annual percentage yields, different annual percentage rates. There's all kinds of things that are different about credit cards, different rewards. You have to read the fine print, and you want to find one that's going to work for you. So don't just apply for the first one that comes in the mail, you know, really look it over. And for students, there are some really great student credit cards out there that offer, you know, some really good support for students. Don't carry a large balance. If you can help it, you know, be paying that balance down. Don't just pay the minimum amount every month, because you're never going to get that paid off. Don't skip a payment. It goes back to don't pay late. Don't close old accounts. So we talked about this before, especially if you're trying to repair your credit. Closing old accounts might actually hurt you rather than help you. Don't just pay the minimum. Paying the minimum basically only covers the interest rate or interest on that card. So paying the minimum balance every month isn't going to get you very far. You should at least send, you know, $10, $20 more than the minimum payment every month so that you can start to pay down some of the principal balance on that card. Don't open multiple cards at once. So this will, again, affect your credit report because all those inquiries are going to be on there. Additionally, if you're in the same night or you know, applying for all these cards, different creditors might not know. So for example, if the goal of giving credit is to not put somebody in a position where they're not going to be able to afford to pay it back. So you don't want to put yourself in a position where you're not going to be able to afford to pay back the credit that has been extended to you. And never share your credit card information. That seems pretty, you know, simple. But we do things all the time that we don't necessarily think about. You buy something from a friend of yours who lives pretty far away from you. So you text them your credit card information. But you're not the only one that sees that text message. And they're not the only one that sees that text message. Those text messages are stored in a database of your phone company, and you have no idea who has access to that. So, you know, being careful about sharing your credit card information. All right, that was all I have for this presentation, and we do have some time for questions if anybody has any.